Good evening, everybody, and welcome to our market review webinar. Guys, my apologies for the slightly delayed start that we had this evening. I had a little issue with my Wi-Fi connection. So, guys, if throughout the webinar my sound or my visuals become an issue and you can't see me, you can't see my screen, or you can't hear my voice, then just pop a message into the group and let me know, and I'll stop before we progress. But for the moment, guys, again, my apologies. The Wi-Fi connection is not as it should be. But anyway, guys, I hope you have all had a fantastic week in the markets since I saw you all last. We've had a very active week fundamentally. We've got some great fundamentals to go through this evening, then before we look at the charts for the week ahead. So, starting off, guys, we will just take a look at the positions that we analysed last week. We looked at the Canadian dollar, Japanese yen for a short position. So just go on to Trading View and get that chart up and review last week's price action before we continue for the week ahead. Okay, so last week, guys, we were looking for a sell limit order on the CAD yen. We had just broken through a fantastic support structure, and what we were looking for was a retest of this previous support structure, a retest as that roll reversal had taken place, and that support level had then gone from support to being resistance. And we were looking to capitalize on that roll reversal and then, of course, take a short position within CAD yen to the downside. So, as you can see, guys, we had the short movement that we were expecting, but unfortunately, we didn't see that counter trend movement to pick up our sell limit order, of course, to trigger our position. So unfortunately, we didn't get triggered on our entry for our sell limit position over this asset. So again, no loss, no profit. We have some fundamentals to cover going over for the previous week over the Canadian dollar. And, you know, guys, this is what we were looking at last week. So we're going to take a look at the fundamentals, take a look at what we were expecting last week to what actually happened. And then, of course, we'll move on and look for further opportunities within the market. So, again, we had our expectation filled, but unfortunately, we didn't have a fill or an entry into our trade position. So unfortunately, the CAD yen didn't fully meet the expectation in that essence. However, what we did see within the markets elsewhere was we had a pending position already in play over the Aussie yen. If you remember back to a couple of webinars a couple of weeks ago, we had a sell limit order on the Aussie yen that was triggered, and then we found ourselves in an area of consolidation, unfortunately, with that position. However, that did follow through last week, and that did meet its profit target. So although we didn't have a fill and order on the CAD yen wasn't triggered, elsewhere on the Aussie yen, it did meet our expectation from the previous webinar. So although we had a position which we analysed, we didn't get an order, we didn't get a fill for our order, it didn't meet our entry. Elsewhere within the market from the previous webinar, you know, we've had some profits closed off. So although you know, we didn't have any profits from the CAD yen, the Aussie yen closed off and gave us some fantastic profits from the market. So guys, do you have any questions about the positions that we analysed last week, or the positions from you know, the previous couple of webinars, the Aussie yen, of course, in particular? If you don't have any questions, we will take a look at last week's fundamentals and then take a look to the week ahead in the markets. Of course, guys, if you have any questions throughout the webinar, please don't hesitate to pop those into the question box, and of course we can go through those before we progress. Okay, fantastic, guys. So moving on to last week's fundamentals, guys, we had a few big pieces of data to enter the market last week, and we broke those down together. So let's take a look and see what happened, see if our expectations were met in regards to the fundamentals. So starting off, guys, we had positive data month on month for building approvals for the Australian economy. You know, and we took a look at building approvals in particular, and we spoke about the Reserve Bank of Australia and its position in regards to monetary policy. And within the monetary policy meeting minutes, it gave its economic outlook for, you know, the months ahead. And now, initially, previously, the Reserve Bank of Australia said that they do feel that building approvals, building construction, building permits should rise in the you know, in the near to mid term. So by near to mid term, they're talking over the next 2 to 4 quarters. So over the next sort of half a year to a year, they're expecting these figures to improve, because, you know, they're putting money into the construction industry regarding housing. They're giving, you know, they're providing those permits, they're approving those applications. And as expected, we saw positive data, 2.5% over a 1.5% estimate. That's up. You know, that's almost a 10% swing from the previous actual, guys. The previous actual minus 8%, minus 8.1%. And, you know, the Monday's figure coming out at 2.5%. That's a swing of 10, you know, you're talking 10.6%. That is a huge swing. So we're starting to see that data, that positive data coming through to the Aussie dollar. But again, guys, we spoke last week that although the Reserve Bank of Australia is expecting these good figures around the building and construction industry, around building permits, building applications, building approvals, and obviously and ultimately construction, they are expecting these good figures. But as we spoke about last week, there was no real reason to buy the Aussie dollar on a macro basis. And the reason being was because although these positive, figures were forecasted and these positive figures were expected in regards to building houses, there was still a lot of uncertainty elsewhere within their economy. One of their largest partners, of course, is China, and we're starting to see, the effects of the US-China trade war follow through to China's trading partners. Elsewhere, of course, apart from the US, we're starting to see, China's other trading partners take a back seat while China negotiates its way through the discussions with the United States. And we're starting to see those uncertainties follow through into the Australian economy. And guys, this was picked up on Tuesday with the Reserve Bank of Australia rate statement. So the cash rate, the interest rate, was expected to stay at 1.5%, and indeed it did stay at 1.5%. There was no change there. There wasn't expected to be any change there. It's been 1.5% now for quite some time. But the rate statement highlighted these concerns elsewhere within the economy, and we did see the Aussie dollar sell off quite substantially. The Aussie US dollar, the Aussie dollar Japanese yen. It was this piece of data that caused the Aussie yen to finally meet its expectation. So there was no real change there for the Aussie dollar. We expected this negative data. We expected it to be a tough time for the Australian dollar in terms of its economic performance, and this was made public to the market last Tuesday. So moving on elsewhere, guys, we had Governor Carney testifying to the House of Lords, I believe, due to testify on Brexit, inflation and economy before the House of Lords in London. So we did see the pound strengthen up in the run-up to this data announcement. Governor Carney's fears over Brexit, and of course he was pressed on Brexit in great detail. Governor Carney's fears on Brexit and the Bank of England's fears on Brexit, in a speciality in regards to a no deal. We're starting to see the Bank of England take a step back from what it was saying. Previously, the bank was saying that a no deal would be disastrous for the United Kingdom, and every single area of the economy would experience negative growth, would experience contraction. Governor Carney from the Bank of England came back from that on Tuesday afternoon and said, well, no deal. They've revised their forecasts for a potential no deal as it looks more and more likely. And this potential no deal is expected to be much, less hurtful to the British economy than it was previously expected. So they've cut, those negative figures. So they've put on a more positive expectation towards Brexit for the UK economy. And this was well received by the market participants, and Over this time, we did see the pound sterling appreciate somewhat, and we saw the buyers coming back into the pound. So we did identify this last week that it could potentially be volatile for the pound, given that it is the Bank of England's governor, Mark Carney, addressing the market in regards to Brexit, inflation, and the economy. So we expected that potential volatility, and it did come through as better than expected for the pound. Because we sat out from looking at the pound last week because of that potential in volatility. We didn't know where the market was going to go in that respect. With the Canadian dollar, for example, we know that, and when we get onto that data, just coming up on Wednesday, it wasn't like the Canadian dollar. The Canadian dollar we knew was going to depreciate. We knew it had negative macro data. We knew it was a very dovish situation for the Bank of Canada. So it was a very negative, a very bad situation for the Bank of Canada. So we anticipated that in our position with that CAD yen short. So the pound data wasn't the same. We couldn't interpret it in the same way as we could that Canadian data. So for the pound, although we expected volatility, we didn't know if it was going to be buying volatility or selling volatility within the market. So we left the pound well alone. So moving into Tuesday evening, we had Governor Lowe addressing the markets, and so he was due to give a speech to the housing market and the economy, and this was at the Australian Financial Review Business Summit in Sydney. So guys, we didn't see too much volatility in the market from this data event. The volatility came from this data event below, GDP quarter on quarter. And the reason we didn't see much volatility from Governor Lowe from the Reserve Bank of Australia, it's a central bank governor addressing the markets. So usually we do see that that additional volatility. The reason that we didn't see that volatility was because let's look at the topic of the speech, the housing market and the economy. Well, the Reserve Bank of Australia made its position on the housing market very clear, that it expected growth, it expected good performance over the near to mid-term. Over the short to mid-term, it expected that positive performance. But elsewhere, it was the other issues of the economy, that held the uncertainty. So he's already effectively delivered this speech to the market from the Reserve Bank of Australia rate statement that we saw, previously in the day. Here we had the Reserve Bank of Australia rate statement. This information that was released then was just packed into the speech that Governor Lowe made in the evening. So he took a few questions from the audience, and we didn't see any real movements with the Aussie dollar there. So moving on, of course, this is where we did see the volatility, GDP quarter on quarter. This was fairly negative, 0.2% down from the estimate of 0.5%, and ultimately down from the previous result of 0.3%. So, in terms of GDP, we're seeing some disappointing figures. 0.2% has been, one of the worst figures quarter on quarter, since December 2016. So in about, we saw the worst figures coming out for about 2.5 years for the GDP. And again, this is quite detrimental to the Aussie dollar. It put quite a lot of selling pressure over the Aussie dollar. And again, this is what we were talking about, the concerns elsewhere within the Australian economy. Although the building market is expected to be positive, there's just too many concerns and uncertainties elsewhere within the Australian economy. And guys, ultimately, we're going to look to take advantage of those macro bearish positions. So guys, moving on, trade balance for the Canadian dollar. Trade balance data was again worse than expected. It was expected to be in a deficit at 2.4 billion, but that deficit increased to minus 4.6 billion. So the gap widened even further, almost twice as large as what it was expected at 2 billion. And again, this figure is, again, one of the worst figures that we've seen since cool. That is, guys, one of the worst figures that I think I've ever seen for Canadian trade balance data, especially going back even as far as 2015, guys. We haven't seen data this bad for trade balance data for the Canadian dollar. And this is what we was speaking about as well with the Canadian dollar. The Canadian dollar has a lot of uncertainties within the economy, and we're going to take a look at that in just one moment. Especially, guys, it wasn't so much the overnight rate, but it was the rate statement that accompanied it. So we identified this last week, guys. We identified that although we didn't expect a change in the overnight rate, it was the rate statement that could potentially bring in the volatility into the Canadian dollar, and this was exactly what happened. It came out negative. The data came out overall negative, which helped the CAD yen that we were looking at, and again, ultimately just didn't allow us to pick up a position because we didn't have any counter trend movements. Now, the Canadian dollar data that we saw, although the interest rate remained the same, they highlighted a lot of concerns elsewhere within the markets. They said that future interest rate rises would have to be put on hold amid an uncertain economy. So what does that mean? It means that they haven't got that certainty within themselves, within the markets, to look to raise interest rates over the short term. So they haven't got that data to look to sustain those interest rate rises. And this is what we were looking at, guys. We were looking at the negative GDP figures month on month that came out for the Canadian dollar 2 months in a row. At the end of March, on March 29th, if they come out negative once again, then Canada will be in a recession. So again, guys, we identified that it was going to be negative for the Canadian dollar on a macro picture, and this just reaffirmed our position, reaffirmed our expectation. Wednesday afternoon, showed us that the Canadian data is, at present is as bad as we expected it to be. So there could be some good potential with short positions with Canadian dollar for the week ahead. Moving into Thursday, we had retail sales data for the Australian economy, retail sales month on month, missing its expectation of 0.3%, but ultimately posting a 0.5% climb from the previous figures. So, not real, no real major development there for retail sales. So again, guys, this was a big one. On Thursday afternoon, we had the main refinancing rate for the European economy, for the European Central Bank. And guys, we weren't expecting this to change. This was expected to stay at 0% and is expected to stay at 0% for a long time. What our attention was brought to was the monetary policy. We spoke about the position of Europe at the moment. The macro position, if we look at Italy, Italy is in a recession. Germany posted 0% growth. It just avoided a recession because it was on that flat rate of 0%. France, again, is at, I think, about 0.2, 0.3% growth. We're seeing very concerning growth figures throughout Europe. And this is what we were talking about over the past couple of weeks when we were speaking, and we were saying, has Mario Draghi, the governor of the European Central Bank, has Mario Draghi unwound monetary policy too soon? Has he taken those stimulus measures off the table? Has he done that too soon? And this was echoed in the policy statement that followed. It said that the European Central Bank may have indeed taken stimulus off the table a little bit too prematurely. So ultimately, guys, what we may see, or we could potentially see, is the European Central Bank go back into those stimulative measures. So, going into Friday, guys, we had, of course, the big one. Now, we had some very disappointing non-farm employment change figures, especially, guys, from those previous figures. But we saw very little movement within the markets. If we take a look back to the US dollar and take a look at non-farm payroll data on Friday afternoon, it was, the expectation was ultimately realised in terms of what we were expecting for non-farm payroll data, which was effectively this. So we were expecting that whipsaw, which is usually what we see within the markets, to entice the buyers into the markets as the prices are moving, to the upside. And then we see this movement that takes, the sellers push to the downside, which then takes the buyers out of their positions and entices them into short positions. And then ultimately we see, that price move back to the upside, and, back up to those similar levels of where, it was prior to that data release, before that data release. So we saw this whipsaw, which just created liquidity within the market. So there's no major movement. There hasn't really been a major movement with non-farm payroll for quite some time now. We just see this whipsaw activity, and the range of this whipsaw has been getting steadily less and less and less. Now, I would have personally expected, much worse, much of a worse reaction for the US dollar, given that the figures were just 20,000, down 200, down 291,000 from the previous result. I was expecting the US dollar to sell off quite significantly, but it hasn't. There is too much strength elsewhere within the US economy. And this is something that we're going to take a look at this evening, guys. We're going to prepare ourselves for the week ahead. And then we're going to take a look at this weak Australian economy and this strength within the US dollar. So both days over the weekend, we've had Chairman of the Federal Reserve, Jerome Powell, addressing the markets. So we might see on the market open a little bit of volatility, just from these speeches over the weekend. I wouldn't expect too much of a gap with the US dollar, as it isn't really, first of all, he's due to speak about monetary policy normalization at a university in California. I wouldn't expect anything major there. And then Sunday, he's due to discuss interest rates, the economic outlook, and financial stability in an interview constructed by CBS. So, we might see a gap with the US dollar, but guys, I wouldn't expect anything major. I wouldn't expect anything major at all, because it wasn't major events that the chairman of the Federal Reserve was addressing. These are very sort of, run-of-the-mill events. They're sort of very basic, very routine events to take place. Going into the markets Monday, guys, straight away we have some more data expected for the US dollar. Core retail sales and retail sales data expected to both be better than what we saw from the previous results. Guys, really, that's not that's not difficult. Last results were very disappointing and quite a bit of an anomaly. We haven't seen figures like this within retail sales and core retail sales for some time. So, we are expected to see those figures start to normalize and go back up to, levels that, previous, levels of expectation around that 0.4% expectation. So we should see some strength come into the US dollar off of that data. Tuesday on midnight UK time, we have again Jerome Powell, chairman of the Federal Reserve, due to deliver opening remarks at the National Community Reinvestment Coalition's Just Economy Conference. Cool. The name just rolls off the tongue there. National Community Reinvestment Coalition's Just Economy Conference. So again, guys, nothing major. Jerome Powell seems fairly busy, giving speeches around at different events, but nothing real major to the US economy. Moving into Tuesday morning, we have GDP figures month on month for the pound, expected in at 0.2%, an increase. Taking it back to September 2018. So we're starting to see some positivity come back into the pound sterling, and these were the adjusted figures that Governor Carney was speaking about with regards to the pound for their own figures at the Bank of England. They were expecting, some positivity within the macroeconomics, and we're starting to see this coming through from elsewhere, from the Office of National Statistics, the ONS. We're starting to see some increase in forecasts. So, if we do meet that forecast, we could see some bullishness for the pound sterling on Monday. And that overall bullishness of the pound continuing as we approach that deadline for Brexit. As we spoke about towards the end of February, and we spoke that there was potential upside, there was good potential upside until, that final Brexit date. And guys, we've seen that, continue. So with good, we've seen that happen over the past couple of weeks, and with good GDP data month on month, we could see we could see that pound rally continue into next week. So what we need to see positive GDP figures for the pound, and then we'll see a rally within the pound sterling. Manufacturing production figures are expected to be positive and an increase on the previous, but ultimately nothing too inspiring with manufacturing. Moving into the afternoon, we have CPI and core CPI data for the US dollar, expected to be 0.2%, which is, round about the average that we've seen over the past year or so. It's been really between 0.2, 0.3% and minus 0.1%. So again, some steady figures coming in for CPI. I wouldn't expect too much there for the US dollar. And then into the afternoon, we have Parliament's Brexit vote within the House of Commons. Guys, this is expected to move the pound quite significantly, and this isn't something that I would look to be involved in within the markets. This could move the pound quite substantially. So on that basis, guys, I don't know what's going to come from that Brexit vote, but I'm not going to look to trade the pound around that event. For me, guys, I'm not a scalper within the markets, but if you guys do, if scalping is your preferred style, then this event, Wednesday afternoon is going to be potentially, very, potentially profitable, going to be very volatile for sure. So, um, I don't know how that vote's going to turn out, but I would expect a lot of volatility on Tuesday afternoon. Sorry. Moving into Wednesday, we have the annual budget for the pound. This will create some volatility given that Brexit is just a couple of weeks away. We will see some large volatility for the pound sterling from this data release. So again, guys, be very careful with your pound positions over the week ahead. So core durable goods orders month on month and PPI month on month. I wouldn't expect to be too volatile for the US dollar. We will likely see some movement off of that data release, but no major movements expected there. Thursday, guys, very easy day on Thursday in terms of fundamentals. We have a lot of data, but nothing major that we need to be concerned with. And then into Friday, it's just monetary policy statement, the interest rate, and the governor for the Bank of Japan, Governor Kurada, addressing the markets. So with regards to monetary policy with the Bank of Japan, we might see some volatility here. The reason being, guys, is because we have a major fundamental event due to take place, of course, with the UK expected to leave the European Union in just over a couple of weeks. So we're expecting these major fundamental developments. So the governor for the Bank of Japan, Governor Kurada, might come out to the markets and state that, the Bank of Japan won't tolerate the Japanese yen being used as a safe haven currency. They tend to make these statements around, large fundamental events. And the reason being is because Japan is an exporting economy, and they rely a great deal on exports. So with an expensive currency, they're not as able to sell as much. Foreign investors don't get as much for their money with a strong Japanese yen. So they're not able to buy as many goods, which means the Bank of Japan and the Japanese economy as well, the Japanese economy isn't able to produce as many goods. So the manufacturing industry is affected as a result. So, the Bank of Japan might take a step in there and say that they won't tolerate the Japanese yen being used as a safe haven currency. Guys, if we see that, I would expect some volatility with the Japanese yen. But if that isn't mentioned, then the Japanese yen has been fairly stable as of late. It's been a fairly cheap currency, which is going to suit their export industry. So, my only real concerns here with the Japanese yen is Governor Kurada mentioning Brexit and, the potential impact with market participants such as you and I buying the Japanese yen as a safe haven currency. He might say that the bank won't tolerate that, which will just put off traders from taking those positions within the yen. So we might see a little reshuffle of positions with the Japanese yen, if that is mentioned. If it isn't mentioned, I would expect it to be very steady for the week ahead. So guys, just a couple of major events. The Bank of Japan data there, I wouldn't expect, I would expect that to be pretty standard. It's more Tuesday and Wednesday with the pound, with the Parliament Brexit vote, and the annual budget release on Wednesday as well. Elsewhere, guys, it's pretty steady for the week ahead. We don't have too much data that's going to majorly impact the markets. So in that respect, guys, I think we've got a quite a clean week ahead. And for me, I'm going to look to take advantage of that bearish Aussie dollar. As we saw for last week, that negative Aussie dollar data, being confirmed within the markets, I'm going to look to take a opportunity, take advantage of, of the market psychology. What we are expecting is the Aussie dollar to sell off after this negative data. But what I think for the week ahead is, I think that there's going to be some opportunity to take a counter trend movement and then look to sell the Aussie dollar from a higher price. Okay. The reason being, guys, is because we captured that movement last week with the Aussie yen that we had still in play. The Aussie dollar, Japanese yen met our expectation off of this negative data, and we've seen the Aussie dollar sell off quite significantly since that data release. But I think now we're going to have a large sentiment of the market, or a larger portion of the market. Their sentiment is going to be that of a short Aussie dollar. So I think this is going to offer us some good opportunity to take a counter trend position on the Aussie dollar to the upside, and then ultimately look to take advantage of an Aussie dollar, shorting the Aussie dollar at a higher price. But for the moment, I feel there's some good opportunity to look to buy the Aussie dollar in the short term. So looking forward to the week ahead, guys. My bias is with the Aussie US dollar. Ultimately, I'm expecting, lower prices on the Aussie dollar, but because the majority of the market is going to be looking at a short Aussie dollar, I think there's some good opportunity to take a potential counter trend position. And weekly, we're sat at a fantastic level on the Aussie US dollar, and we're going to explore that for this evening, because this counter trend movement, guys, is something that I'm very interested in, and then I'm ultimately looking to sell the Aussie dollar from a higher price. Now, I think the opportunity is too good to pass up on the counter trend movement with the Aussie dollar. And so, guys, we're going to take a look at that very, very quickly this evening, and then we'll take a look at the potential macro short as well. So we have a good few opportunities coming up with the Aussie US dollar. So we've come down to the 0.70 handle. We've had some good support come in from that price level. Take that down to the hourly. We can see in a little bit more detail. No, we've had a good rejection from these lows. The buyers have come into the market, quite powerfully, and we've pushed ourselves back above that 70.40 significant price level. So I think there's some good opportunity, for taking a counter trend movement to the upside, and especially, guys, up to around the 70.65, around the 70.86 significant price level. So if we take a look back on the 4 hours, we can see that the buying pressure has been coming back into the markets. And again, on the daily, gave quite a positive day on the previous day's finish. And ultimately, guys, on the macro picture, we are sat around a very good price level indeed at this 70.40 significant price. There's some very strong levels coming back in, right up towards that 70.86. We sat in this little zonal area between this support down at the the 70.40s. These previous apologies, guys. Just realised you couldn't see the crosshair. At these previous support levels at 70.40, 70.30, between that 70.80, 70.90 price level. So we've approached, quite a nice zone, and I would expect the prices to get up to 70.80 before we see that next leg to the downside. So ultimately, guys, what I'm expecting to see with the Aussie dollar is something like this. I'm expecting maybe a move back down here to that 70.20 level, and then movement back up towards that 70.80. And then for the sellers to come back into the market to then, ultimately for a retest of this level here. And then, guys, we might see something like this. This is what I would expect to see, for the Aussie dollar moving for, to the week ahead. Something like this is what I would expect to see play out for the Aussie dollar. So I think that there's some good counter trend opportunity, and to look to take it up to that 70.86. We haven't retested that area since we've broken out of that. We had this consolidative behavior. We broke out of that area, and then it was immediately retested before the confirmed breakout to the downside. What I'm looking for is just this retest of this area, and then the selling pressure to come back into the markets. But I think there's too good of an opportunity for us to pass up on a potential counter trend position to the upside, because, guys, our stop loss is going to be sort of between 70.24 and 70 about 0.6. So for this position, there's a very attractive potential stop loss within this position for, of course, a potential reward of about 60 pips. We're looking at about a 15, 17 pip stop loss for about a 60 pip profit reward. So some fantastic potential risk to reward on the table there with this buy position. So I think this opportunity to the upside is too good to pass on. But ultimately, I am holding this macro picture view to the downside. So instead of looking to, to place an order from this level, instead of looking to place an order from that level there, I'm going to look to take advantage of the counter trend movement to the upside from this position here. Okay, so I'm going to look to capture this movement and look to exit out around this level. So let's mark this up into a position for the week ahead. So what I'm looking for is a buy limit order on the Aussie US dollar at 0.7025. My stop loss for this position, as mentioned, so 0.25, sorry, just picks us up at this previous the previous low from the one that we currently have. So I'm expecting that lower low and that movement to the upside. So our stop loss, as mentioned, we're going to just pop that just below the low of the structure. So if we go at the 70 handle, it gives us a stop loss of 25 pips. Still a fantastic risk to reward potential for this position. So stop loss at 0.7000 at the 0.70 price handle. And then in terms of profit target, guys, we're going to look to take it back up to that price level towards that 70.86 price area. Okay, so we're going to look to take this counter trend movement up to that significant price area as we look to retest that price level. And then, ultimately I'm expecting that the sellers to come back into the market and push prices back to the downside. So, and to come out just below that level of 70.86, we'll come out 70.75, giving us, 50 pip potential for a 25 pip stop loss, giving us a 2-to-1 a 60 pip potential, giving us just over a 2-to-1 potential expectation with this trade position. So looking to come out just below that 70 apologies guys, that 70.86 price level. Guys, do you have any questions about this this position on the Aussie US dollar? So this is my main play for the week ahead. I'm looking for this counter trend movement because, it's a good opportunity, guys. It's a good opportunity for us to take a couple percent, 2% out of the market. And for me, 2% a week offers a great compounded return over the year, and especially over the years. So, there's no need for us to be greedy, looking for those 100, 200 pip movements. I think the criteria here is being met, and we have a great opportunity for a counter trend movement, only looking to take 60 pips out of the market, but ultimately looking to take a couple percent of profit. So guys, this is my main play for the week ahead. I'm going to look to stay away from the pound for the week, given the data that we have. We have the annual budget report for the pound amongst. Apologies, what was the other major announcement for the pound? So we do have GDP figures, the annual budget. Okay, yeah, it is GDP figures and the budget for the pound going into next week. So I think it's going to be a little bit too volatile for the pound. But elsewhere, I think the Aussie US dollar, we have a fantastic counter trend opportunity, and ultimately I want to take advantage of that and get us some nice profits for the week ahead. So last week we got to close out some profits from that Aussie yen short from a couple of weeks back that secured us about 90 pips of profit on that position. It was about 1.5%, with swap charges for about a week or so. It was about 1.5% on that. So good profits made there on a short Aussie dollar. Let's look to make some good profits on a counter trend bullish Aussie dollar. So very well done this evening, guys. As always, we're painting that fundamental picture as we go week by week, and we're building our background knowledge so that we know where to look within the markets. And this counter trend position with the Aussie dollar is looking very favorable indeed. So guys, if we don't have any questions moving forward, we will leave it here for the week, and we will look to return and regroup once again next week. Okay, guys, fantastic. So very well done again this evening. I wish you a very profitable week in the markets for the week ahead. Guys, let's make some great profits on this Aussie dollar long, and let's next week come back and talk about the 2% profit that we've made here with the Aussie US dollar. I wish you all the best for the week ahead, and I very much look forward to seeing you here again next week. Guys, from me, I wish you all the very best. Take care, and goodbye for now.